On October 28, 2025, global financial markets braced for impact. The anticipation was palpable, with analysts and traders glued to their screens, dissecting every piece of news and every market movement. The stakes were incredibly high, and the atmosphere was charged with a mix of anxiety and hope. As President Donald Trump began a crucial diplomatic tour of Asia. This tour was not just another series of state visits, it was a mission with the potential to redefine international relations and economic policies. The world watched as Air Force One took off, carrying with it the hopes and fears of millions. This wasn't just about photo ops, it was a high-stakes mission that could reshape global trade. Business leaders and policymakers were in intense discussions, trying to predict the outcomes and prepare for any eventuality. The meetings and handshakes were more than mere formalities. They were the battlegrounds where the future of global trade would be decided. Investors worldwide watched every move, wondering if Trump's trip would ease trade tensions or spark new uncertainty. The financial world was on edge, with stock prices fluctuating wildly in response to any news from the tour. The uncertainty was palpable, and the stakes couldn't be higher. The highlight, a summit with Chinese President Xi Jinping at a Pacific Rim conference in South Korea. This meeting was the focal point of the tour, with both leaders under immense pressure to deliver results. The world held its breath, waiting to see if this summit would bring about a new era of cooperation or deepen existing divides. Trump hinted at a major new trade deal with China, potentially dismantling tariffs and barriers that have rattled global supply chains. The implications of such a deal were enormous, promising to ease the flow of goods and services across borders and stabilize markets that had been in turmoil for years. The world's economy, now a web of interdependencies, was on edge, especially in Asia, where economies are deeply tied to both the US and China. The interconnectedness of modern economies meant that any shift in US-China relations would have ripple effects across the globe, affecting everything from manufacturing to technology to agriculture. As Air Force One touched down, markets reacted instantly, fortunes hanging on the outcome of a single meeting. The immediate reactions were a testament to the high stakes involved, with traders and investors making split-second decisions that could result in significant gains or losses. Would Trump's assertive style bring a breakthrough or a stalemate? The answer could shift stock indices, currencies, and commodity prices worldwide. His approach, often seen as unorthodox, had the potential to either break the deadlock or exacerbate tensions, making the outcome of this tour even more unpredictable. The week ahead promised high drama, with the savings and investments of millions in the balance. Families and individual investors were particularly concerned, as the outcomes of these high-level meetings could directly impact their financial well-being. The sense of uncertainty was not confined to the trading floors, it permeated households around the world. The stage was set for a pivotal moment in global finance and politics. The decisions made during this tour would have long-lasting implications, potentially altering the course of international relations and economic policies for years to come. The world watched, waited, and hoped for a positive outcome. All eyes were on Asia. The region, already a powerhouse of economic activity, stood at the crossroads of potential change. The outcomes of this tour would not only affect the immediate stakeholders, but also set the tone for future engagements and policies. The world held its breath, waiting to see what the future would bring. President Trump's first stop was Tokyo, reaffirming the US-Japan alliance with new urgency. In meetings with Prime Minister Sanae Takaichi, Japan pledged increased investment in the US and a greater role in its own defense. Japan also agreed to boost imports of American goods, aiming to balance trade and avoid disputes. Business leaders from both nations met, signaling that the alliance was about economic growth as much as security. The Tokyo visit reassured investors, but the real test, talks with China, still loomed. Markets welcomed the stability, but remained cautious, knowing the main drama was yet to unfold. The world waited for the next act. In Japan, Trump visited a major US military base, a significant location that underscores the strategic importance of the region. Delivering a speech to American troops, his words were not just for the soldiers present, but for the world to hear. This was more than ceremony, it was a show of US strength and commitment to regional security. The presence of American troops in Japan serves as a powerful reminder of the enduring alliance between the two nations. The visit reassured allies like Japan and South Korea that America's military support remained firm, even as trade took center stage. It was a clear signal that the U.S. values its partnerships in the region. It also sent a message to China. The U.S. sought economic cooperation but would not compromise on security. The balance of power in Asia was being carefully managed. For markets, the display was a double-edged sword, stabilizing, but also a reminder of underlying tensions. Investors were keenly aware of the implications for global trade and security. The military backdrop added strategic depth to the upcoming negotiations. It was a reminder that economic discussions were taking place in a context of military readiness. Investors watched, knowing that both economic and military power were in play. The interconnectedness of these elements was clear. The stakes had never been higher. The world was watching, and the outcomes of these interactions would shape the future of international relations. The Trump-Xi summit in South Korea was the centerpiece of the tour, captivating global markets. Hopes for a breakthrough trade deal fueled cautious optimism, but the risks were enormous. Lingering disputes over tariffs and market access had disrupted businesses worldwide. A deal could unlock growth. Failure could trigger a global downturn. Trump's unpredictable style added drama. Investors wanted results, not just rhetoric. As the summit approached, speculation ran wild. Would there be a sweeping agreement, a limited deal, or a collapse? Asian markets held their breath, waiting for clarity. The world was on edge. While U.S. markets hoped for a deal, Asia's mood was anxious. Major indices across the region fell, reflecting deep uncertainty. Hong Kong's Hang Seng and China's Shanghai Composite both slipped, highlighting investor caution. Japan's Nikkei lost ground despite positive news from Tokyo, as the China talks overshadowed everything. Australia and South Korea saw similar declines. Even strong economic data couldn't offset the geopolitical jitters. For Asian investors, the Trump-Xi meeting was the only story that mattered. Until there was clarity, markets trended down. In contrast, Wall Street surged with optimism. The S&P 500 hit record highs, up 38% since April, as investors bet on a successful Trump-Xi deal. The Dow and Nasdaq also soared, with tech stocks leading the charge, hoping for relief from trade tensions. U.S. investors were buoyed by Trump's confident rhetoric and the prospect of a Federal Reserve rate cut. The combination of trade optimism and expected monetary stimulus created a perfect storm for bulls. Major earnings reports added to the high-stakes environment, but the prevailing mood was pure confidence. Wall Street was betting big on a breakthrough. The divergence with Asia was stark. Why the split? Why did investors in Asia and the United States react so differently to the same global headlines? The answer lies in a complex web of risk, perception, and economic context. It comes down to proximity to risk. Investors in different regions are exposed to unique vulnerabilities, and their responses are shaped by how close they are to the source of uncertainty. Asian economies are tightly linked to China, so any disruption hits them first and hardest. When China's outlook dims, its neighbors feel the tremors almost immediately, whether through trade, supply chains, or investor confidence. For many Asian investors, the risks are not just theoretical, they're woven into the fabric of daily business. U.S. investors, shielded by a large domestic market, focused on the upside of a potential deal. With less direct exposure to China's immediate economic shifts, American markets could afford to be more optimistic, betting on positive outcomes and the resilience of their own economy. The Federal Reserve's expected rate cut gave Americans extra confidence, something Asian markets lacked. Lower interest rates often mean cheaper borrowing and a boost for stocks. So, U.S. investors saw a safety net that their Asian counterparts simply didn't have. Timing played a role too. Markets don't just react to news, but to when that news arrives. The sequence of trading hours can amplify or dampen reactions, depending on which market opens first. Asian markets opened amid peak uncertainty, with little clarity on how events would unfold. This uncertainty led to caution, as investors braced for the worst before any positive developments could be confirmed. Meanwhile, Wall Street traded on hopeful headlines. By the time U.S. markets opened, there was already a sense of optimism in the air, fueled by news of potential progress and reassurances from policymakers. For Asia, caution ruled. For the U.S., hope prevailed. The mood was buoyant, with investors willing to take risks in anticipation of a favorable outcome. It was a classic tale of two perspectives, one rooted in immediate risk, the other in future promise. The contrast was stark, shaped by geography, economic ties, and the flow of information. While Asian investors looked for stability and protection, their American counterparts looked ahead, searching for growth and opportunity. Monetary policy and market timing shaped the mood. Central banks and trading hours set the stage for how each region would respond, amplifying the divergence in sentiment. The world watched, divided by geography and sentiment. Investors everywhere tried to make sense of the split, knowing that what happened in one region could quickly affect the other. The outcome would ripple everywhere, reminding us that in today's interconnected world, no market truly stands alone. Stock market swings aren't just for the wealthy, they affect everyone. Rising markets boost retirement accounts and financial security. Falling markets erode savings. Trade deals impact jobs. Success means more exports and hiring. Failure means layoffs and higher costs. Tariffs raise prices on everyday goods. A deal can lower them, stretching family budgets. Market performance shapes confidence. When stocks rise, people spend and businesses invest. Bad news brings caution, slowing the economy. These summits aren't just headlines, they shape our daily lives. The stakes are personal. This week proved how tightly markets are tied to world leaders' words. A single statement can move billions in seconds. News is filtered through local context. Asia focused on risk, the US on opportunity. The outcomes of these summits affect jobs, prices, and savings everywhere. The global economy is interconnected. A shift in Beijing or Washington is felt worldwide. Understanding these links is key to financial literacy today. As the Trump-Xi meeting approached, markets waited, knowing leaders' decisions would shape the future. In the end, their words are the blueprints for our economic reality.